Alright guys, so today we are looking at Bitcoin, and I want to go over the trade I took. So for direction to even trade Bitcoin, I need to know where the price is going, because we're making money off of prices going up and down when we're trading, right? And so on the 4-hour time frame overall, in the past and now, we are in a major downtrend. And if we go even on the higher time frame, such as the daily, in the long term, Bitcoin is obviously going to go up and get to blah blah. But here's the kicker. Right now, we have yet to see any signs of a bullish market. Yeah, when Bitcoin was down there, I remember when it was right here, and everybody thought because it was going upwards that we were in a bullish market. We are not in a bullish market until we break these highs. Okay, meaning that these highs, these previous highs that maintain the down structure that we're looking at. We have yet to see any break of structure that have broken this high, or that have broken this high. Until I see Bitcoin break any of these two structures on a daily time frame, I'm not looking to buy in the long term, or even buy at all, really. I'm actually looking to sell. So what I will do is, knowing that, go on the 4-hour time frame, direction is short, and if you look on the 4-hour, we actually had a new leg down, which was also my trade, but look, it's still going down. Look, we have a leg right here. Let me just get that, the tool. This leg down was caused by large volatility. It was caused by smart money, because they're the only ones that can control the markets. Retailers can't create a movement this big. So this had to been a person or institution selling off Bitcoin right here. Okay. Also, the U.S. news can affect it too. All right, so I'm going to go over to the 1-hour time frame and show you guys something. So we're on the 1 hour right here. And as you can see, we have higher highs and higher lows here. So the reason I took that trade you're seeing now was because you see that gray box up top? That gray box actually reacted off of something. And I was actually, that gray box right there, that gray box was tapping off to a previous supply zone right there. And so once I saw that the wick came right there, where the green arrow is pointing to, that wick came and touched that box. After that, it reversed and started breaking structure. Okay, and what I mean by breaking structure is this. So after it hit that box, we had structure came and break here, which was a BOS. So if I go in the settings, and I don't know why the fuck I just removed it. All right, so if I go in the settings here and I just label it as BOS, which means break a structure, and I just put it red like I always do. Price broke structure and then came back up after breaking that point. So after price broke that point that I just showed you, this is real getting annoying. After price broke this point that I showed you, price came back up and tapped up here into this range. And then once price tapped into that range, it actually came back down here and dropped dramatically right here. Okay, and we broke another structure here. And so after we broke another structure, what happened? Let's do it again. Let's take our trend line and let's draw it right here. Okay, and let's go ahead and put the color red. Sorry, I like to be neat when I'm doing this, because this is how I trade. Because when your charts are too messy and shit, it can just distract you. So we had two breaks of structures. The first time we broke structure, price came back and retraced that point before that I showed you guys, right? And so now, after we broke this structure, what did price do? Price came back, and then where I entered was where price came back. You see the pattern there? It's supply and demand. This is how the market moves. Market moves in structure. The market only goes up and down, and while it's going up and down, it goes up and down in structure, which means lower highs, lower lows, or if we're in bullish structure or in a trending market going upward, higher highs and higher price all-time highs and in higher lows. So I took advantage of that, and I knew Bitcoin was going to fall again. So basically what I did was I entered right there. And the reason specifically that I entered here was because here, I'm going to show you. You see those wicks that are kind of like topping off? That's how you know when the market is actually getting ready to reverse. So if you notice here, if you look on the bottom of my screen, you'll see the volume, right? If you notice from this point, this is called volume divergence. From this point, the green volume has been deteriorating. It's been going downwards. The green volume has been getting less and less prominent. And I usually will do this on the 15 minutes. So, as well as that, what I just talked about, we have an arrow right here. We have a wick right there, a wick right there, and a wick right there. And so these basically are showing you that smart money, when you see wicks like that, that means the trend is about to reverse, because that means smart money is tapping into areas and is about to fill in inefficient. That means they're close to filling in inefficient price action. And the last one is, or was, the inefficient price action filled. And so what we had here, after that, we had some consolidation, and you know how that works. The market, that's all the market does. Consolidation, expansion, consolidation, expansion. We had a consolidation right there, and an expansion after that consolidation, which led to my trade being in profit. But yeah, guys, that's pretty much what I did. So the first step to actually find trades, either if it's Bitcoin, Forex, whatever you're trading, is to first identify the trend, obviously. And to do that, the time frame I recommend specifically for Bitcoin, this is not on all things you're trading, but for Bitcoin, I recommend the 15-minute time frame. And yeah, guys, so that's it. So structure is important. I use smaller time frames for my current structure, and then I go on higher time frames. For a more long-term outlook. So here in Bitcoin specifically, we had matching structure on both higher time frames and lower time frames, because on the 4-hour structure is doing what? Going down, and on the 15-minute and 30-minute and below, structure is going down. So we're matching. And so whenever you see a chart, whatever, I don't care what you're trading, and you guys see that large drops like that, like this, large gigantic drops like that, that means that there is volatility in the market. And so what you can do, you don't have to be afraid of volatility. Work with the volatility, because that's how we make money in the markets. We need that volatility to push our profit in trade. So what you can do is, whenever there's news or there's an event happening with Bitcoin or the Forex market or day trading, whatever you're doing, wait till the news comes out. Wait till that data releases, and then after the news, there's always a retracement or correction, because smart money has to come back and fill in inefficient price action. Because the market, guys, when you're trading in the market, it can't just go up and down. So it can't just go like this, blah blah, like this, blah blah, like this. Sorry, I don't know what the fuck I'm saying. It can go like this is called the healthy price action. So what you're looking at right now is a healthy market, because all markets go up, down, or down, up. But an unhealthy market would be when there's volatility in the market, which means that there's real-time events that are economic, whether if it's macroeconomics or microeconomics. There's real-time things that are happening in the real world that are affecting the chart that makes it move aggressively, like I just showed you. And so when that happens, the market does this. It'll do like this, blah blah, and then drop straight down, and won't have time to come retrace and pick up everything. So what happens is, what I like to do is I like to actually be patient and wait until the price will come and return to fill in these inefficient areas, whether if it's up here or down here, and enter off of these levels and trade them, continuing downwards. And yeah, guys, that's pretty much it. If you want to know more about my trading and blah blah, I do really simple trading concepts. I just focus on the actual chart. I don't like adding shit to my screen. The only indicator I use is volume, which isn't really an indicator. It's actual reflection of the capital that's fueling those movements. So if you look on the bottom of my screen, the area where I took the trade, you can literally see that large spike in red volume, indicating that there was volume there. Okay? And I knew that there was going to be volume there because the market was already trending downwards. So, of course, there's going to be more selling volume, because if the market is trending downwards, there's obviously more selling volume. And also, I was trading it because I was expecting price to come into this area, because, look, here's another gap. You see where I'm drawing that gray box? That is a demand zone in the area of demand when the market had a lot of... See all that green bars on the bottom? That's showing you that price had a lot of volume, had a lot of buying volume. And unfortunately, there was inefficient price action, and price couldn't come back down to that area and balance it out. So price had to just leave that behind and continue going up. You see out there at that gray box how it just goes straight up and doesn't come back down? But as we get here, price starts to reverse. The trend starts to reverse, comes back down into that gray box area, into these areas, and now is going back up. And I'm not saying it's going to go up and switch the trend. It could, but what I'm saying is... these are areas that I like to target. They're just I only trade gaps and order blocks. Order blocks I will explain in a later video. But yeah, guys, I hope you guys found value out of this video. Peace.